Hey, good afternoon, everybody. We're going to go over our Forex trades for today, Thursday, February 12th. We did have two trades. It was a correlation trade between Euro US dollar and Euro pound. We'll go over that in a minute. We did pull out 9.1 pips on that trade. We did have economic numbers. This morning, retail sales came out, a terrible miss for the month of January. They came in down close to 1% for the month. Totally blown by estimates, much worse than expected. Um, uh, and just as we've been saying all along, the economy here in the States is not very good, worse in Europe. Um, and you have the Fed talking about raising rates. And we've been saying to raise rates too, but our reason to raise rates uh, is just to normalize them, to get the banks, to spur the banks to start to lend, because right now, they really don't want to lend, and nor should they want to lend when all they have to do, when all they're doing is taking all they're doing is taking electronic risk. They're not taking real risk. If you raise rates higher, they'll take less electronic, and they'll be more enticed to take real risk. And real risk is what creates an economy spurring along. The Fed wants to raise rates because the economy, as they say, is picking up and is so strong, basically for overheating. Um, if an economy is so strong and overheating, would you have retail sales falling by 1% for the month of January? Would you have home ownership at 20-plus year lows? Would you have labor participation rate at 30-plus year lows? Absolutely not. It would be the complete opposite of all those metrics we just mentioned. So um, they need to stop looking at the economy through rose-colored glasses. If they're persistent on raising the rates and they want to raise rates because the economy is so strong, I don't know how they're going to justify it, to the world. I don't know how they can justify it to the American people, to Congress, the Senate, the president, whatever, to Wall Street. I don't know how they sell it. If they were to just speak the truth and say, look, we want to raise rates because QE didn't really work, and we want to create real, have the banks go for real risk, real inflation, try to create real inflation, not this what they're doing now. Um, you know, Wall Street would buy it. Would we get a sell off in stocks? Absolutely. Maybe you sell off in a dollar. Um, Maybe not. The dollar might actually rally even more. And maybe the stocks really won't sell off. So, they should just be more forthcoming and forthright and just say why. Will they do that? Absolutely not. They'll never do that. But again, I don't know how they're going to justify raising rates uh, when an economy, the data is proving the economy is so weak, which we've been saying all along. Yet they want to insist that the economy is so strong and overheating. So, but maybe they know better than we do. Anyway, so let's go over to two trades real quick. Two trades pulled out 9.1 pips. Let's look at the Euro US dollar first. This one we were short 1.13199. Covered it 1.13137. Picked up 6.2 pips on that trade. This was last evening, by the way. And Euro pound, again, it was a correlation, so we were short the Euro US dollar and long the Euro pound at the same time. On this one, we were long 0.74222, and we got out 0.74251, picking up 2.9 pips. All right, I'm going to try to get the correlation chart up here. Just want to make sure this is okay. Got the correlation chart up. So correlation trades, you're going to be long one, short one. You can see here, this red and green is the euro to US dollar. This blue indicates the euro to pound. It's the correlation between the two. You're going to want to use a long time frame, whether it's a 4-hour or daily. Too short of a time frame, it's not going to work for you too well. But you'll see going in the past here, you'll see when the spread becomes wide between the two and then becomes narrow, that's your profit opportunity. So here's an example here back in the end of January. You could see how wide the spread was. Not that this is a very wide spread, but it is wide. And as it narrowed and they touched, your short from Euro US dollar worked out very nicely, and your pound your Euro to pound actually was probably just about breaking even, I would imagine there. So as that spread narrowed, it was a definite profitable profitable trade. Here's another example from back in the middle of January. You had this spread here. You're again short euro US dollar, long euro pound. Now they both go down, but euro US dollar, eventually that spread narrows, and euro US dollar came down more than, and your short came down more than your long went down of the euro to pound. Again, that would have been a profitable trade. So ours last night, we got out of this a little bit too early, admittedly. We were short euro US dollar just right about here, and we were long euro pound right around here. And as the euro US dollar started to come down, this started to inch up a little bit, and we covered. And we even said when we announced that we recovered, we were probably premature, because as you could see here, you had the euro US dollar come down even more, and the euro pound came up even more. So we could have profited even more so. But now you have it getting wide again. Let's see. This is let me see. That's about 240 pips. When this thing spreads between 200 and 300 pips on this type of a chart, that's when you look to get in. Here's another one. This was another one. Actually, this might have been the one we were in on the 5th. I don't remember if we were in this then. But you can see how wide the spread is here. And by the time this euro US dollar came down, you can see how much more narrow it is. Ideally is when the two lines meet, those are the huge winners. But you're not taking a lot of risk. Your risk is that the spreads widen, whether they widen where they both go against you, and you're too early, you put it on, or one stays relatively flat while the other one goes against you. So it's all about your timing, just like anything else, in the stock market and currency world. It's all about your timing. So if you get in when the spreads are too narrow, you're taking the risk. If you think they're wide and they prove that you're wrong, that they continue to widen, well, then you could lose. So you have to have your stop set just like any other trade. But if you look historically and okay, 200 to 300 pip spread between the two, if that's what it's proven historically, the width, that's when you're going to take them. So you don't get these every day. You could go weeks without them, and then you could get a couple in a short period of time. So anyway, so that's the correlation trade. Just wanted to kind of show you that real quick and go over it. Other than that, like I said, the two trades. So we pulled out 9.1. No scalp trades. We do have 2 open orders, which we're waiting to get filled on. No fills yet on those. And then the retail sales was a big number this morning, which it's difficult to scalp when there's a big economic number like that. So that's it. We're going to wrap it up. If any signals come out, they'll be coming your way. We're looking to trade again later this evening and tomorrow. And that's it. We're going to wrap it up. So assuming we get some action, we'll do a video again tomorrow. Have a great rest of your day.